If you wanted to buy your way into the United Arab Emirates yesterday, it would have cost you about $1/3 million.
Right. Yeah.
But today, they will literally hand you a 2-year residency visa for the price of a budget studio apartment.
It is a massive, massive shift.
It really is. So welcome to our deep dive. I'm glad you're here with us. We are exploring a major policy shift from April 2026 that honestly fundamentally rewrites the rules of global mobility and real estate.
Yeah, completely rewrites them.
Because Dubai has just completely removed the financial floor for its property investor visa.
Yeah.
And to really get into this, we are unpacking a huge stack of sources today.
We've got quite the reading list.
We do. We've got official documentation from the Dubai Land Department, or the DLD. We are looking at some hard macroeconomic and geopolitical reporting from the National. Plus, we have this really interesting strategic investment guide that's tailored specifically for Australian buyers who are looking to, park their capital overseas. And we are cross-referencing all of that with the UAE government's official Golden Visa portal. Because our mission today is to move past just the flashy headlines.
Exactly. We need to look under the hood.
Right. We need to understand not just what these new rules are, but the actual geopolitical calculus driving them. Like, how does a nation-state use immigration policy as an economic shock absorber in, let's be honest, one of the most volatile regions on the planet?
Which is what makes the timing of this so fascinating.
Yeah. Okay, let's unpack this. Let's start with the hard mechanics of that April 29, 2026 announcement.
Right. So for years, the DLD had this Taskeen property investor visa, and it had a very rigid threshold.
Yeah, you couldn't just slide in.
No, exactly. To qualify, your property had to be valued at a minimum of 750,000 dirhams.
Which is, around 320,000 Australian dollars?
Yeah, exactly. Roughly 320K AUD. And that floor, it was there for a reason. They kept the really casual speculators out and ensured they were getting a certain caliber of foreign capital.
But now, looking at the DLD documentation, they have entirely scrapped that minimum property value requirement if you're a sole owner.
Completely gone.
Which is wild. If your name is the only one on the title deed, there is no price floor. You can buy the absolute cheapest unit in the city, and you still qualify for the visa.
And even for joint owners, the barrier was slashed down to 400,000 dirhams per share.
It's kind of like buying a basic economy plane ticket, but then they just hand you a pass to the first-class lounge.
That's a great way to put it. But, they aren't just giving this away out of the goodness of their hearts.
No, definitely not.
If you dig into that DLD source documentation, you see they have aggressively monetized the bureaucracy itself.
Oh, the fees are everywhere.
Yeah. The underlying asset requirement might be gone, but the frictional costs of actually navigating their system are substantial.
Right, because you are paying premium administrative fees at every single step. The principal applicant alone pays, I think, over 10,212 dirhams just for that 2-year visa.
Yep, and that's just the start.
Right. When you start sponsoring your family, they charge thousands per dependent. It's like about 7,382 dirhams for a wife's permit, and then another 6,482 for kids under 18.
Exactly. And then you add in the required medical exams, the electronic title deed processing.
Don't forget the good conduct certificate.
Right. So the state is basically generating massive revenue purely from the logistical friction of the application.
So it's a pivot.
It's a complete shift from a capital requirement to transactional revenue. They lowered the barrier to entry, but they ensure that the sheer volume of new people entering the system pays for it.
That makes sense. But honestly, the most fascinating detail to me in these DLD rules is the physical process you have to go through.
Oh, at the Cube.
Yeah, at the Al Manara Center, the Cube. The rules explicitly forbid any companions or representatives.
No fixers allowed.
None. You have to attend in person, and you must attend alone.
Which is very deliberate.
It really is. It tells me this is about asserting state authority. Like, they are radically opening their economic borders to you, but the second you interact with their bureaucracy, they strip away your entourage.
Yeah, it's a very clear exertion of control over the individual.
Definitely.
But it also acts as a really powerful anti-coercion mechanism, right? It cuts out those predatory middlemen who tend to attach themselves to international real estate deals.
Oh, that's a good point.
But if we look at the broader market impact of this, dropping that 750,000 dirham floor just instantly transforms the utility of all of Dubai's housing stock.
Right, because suddenly everything is viable.
Exactly. Alec James from Savills Middle East, He points out in our sources that this policy directly targets first-time international investors and end users who were priced out before.
So by removing the threshold, the DLD basically turned every single entry-level property in the city into a visa-generating asset.
Exactly, an internationally desirable asset.
But wait, this brings up a massive paradox for me. Because if the barrier to entry is essentially zero now, aren't they risking just completely overwhelming their own system? Why give away residency for the price of a budget studio?
Well, see, that's what's fascinating here. It really isn't a giveaway. Like Alec James was saying, it's a highly calculated move to broaden their addressable market.
Okay, so if the doors are wide open, we really need to look at who is rushing in.
Right.
And this brings us to the perspective of the overseas buyer. Let's look at that Australian investor guide we have.
The Aussie perspective is really revealing here.
It is, because amateur investors look at this data and they are zeroing in on entry-level unit studios, one-bedrooms in places like Jumeirah Village Circle, Dubai South, International City.
The GVC market is huge for this.
Right, and they see properties priced between 250,000 and 700,000 dirhams, and then they see these eye-popping gross rental yields.
Oh, the yields are crazy on paper.
Like 7 to 9%, and the guide says up to 11% in International City. And here's where it gets really interesting, because the perks are massive. 0 UAE personal income tax, 0 capital gains tax, 0 land tax.
It looks perfect.
Right. If I'm an investor listening to this, I'm thinking a 9% yield plus a residency visa and 0 tax sounds like a literal scam. So what is the actual catch here?
Well, the reality of cross-border investing is quite a bit more sobering.
I figured.
The catch is always the investor's home country. Just because there's no tax burden in Dubai doesn't erase your tax liability back home.
Right, because anyone familiar with the Australian tax office knows they aren't just going to let you generate double-digit yields overseas without taking their cut.
Definitely not.
Yeah.
The ATO views that Dubai rental income as assessable income.
So you still pay?
Yep. It has to be declared and taxed according to whatever your Australian income bracket is. And on top of that, if you sell that Dubai property for a profit later, the Australian capital gains tax applies.
Wow.
Plus, you are legally obligated to report any foreign assets over 50,000 Australian dollars.
So basically, the whole tax efficiency of Dubai is neutralized unless you actually move there and sever your tax residency from Australia.
Exactly. But beyond the tax trap, there's another fundamental risk that rookie investors completely ignore.
Currency pegging.
Yes. This is probably the most critical variable in the whole equation. The UAE dirham is firmly pegged to the US dollar.
Right.
But the Australian dollar is a floating currency. It's subject to all the global market volatility.
So the investor isn't just betting on whether Dubai real estate goes up. They are inadvertently trading the Australian dollar against the US dollar.
Exactly. They are entirely exposed to that foreign exchange spread.
Wow.
Think about it. Let's say an Australian buys a 500,000 dirham apartment. Over a 2-year period, if the Aussie dollar strengthens significantly against the US dollar, the actual value of that rental yield shrinks when they bring it home.
So an 11% gross yield in Dubai could just be wiped out by, what, a 5 or 10% swing in the exchange rate?
Easily. To responsibly model returns, you have to build in a big foreign exchange buffer.
Okay, so that 2-year entry-level visa is highly attractive on paper, but financially super complex in practice.
Very complex.
But if that 2-year visa is just the ground floor, what does the rest of the building look like? Because the UAE portal outlines a very deliberate residency ladder.
It really is a ladder.
Yeah.
If we connect this to the bigger picture, it looks a lot like a corporate talent acquisition funnel.
Yeah, it's like the 2-year visa is the internship program, bring in massive volume, test the waters, pull in young capital.
But they don't want everyone to stay interns forever.
Right. They want to trap accumulated wealth, which brings us to the premium tiers, starting with the 5-year retirement visa.
And the mechanics of this retirement tier are so highly targeted.
Yeah, it requires a minimum property investment of 1 million dirhams, and you have to be at least 55 years old.
Right. And notably, this tier does not require a local sponsor, and it's easily renewable.
So who are they targeting with this?
It's engineered specifically to capture the capital of Western expats who are, liquidating their primary homes in their origin countries.
Ah, right.
The state is offering them a lifestyle-driven, tax-efficient harbor for their twilight years, as long as they inject 1 million dirhams into the local economy.
Okay, so that's the retirees, but then we reach the partner track. which is the 10-year golden visa.
The premium option.
Yeah, and this one requires a massive 2 million dirham real estate investment.
Which is a huge jump.
It is. But looking at the UAE government source, the golden visa isn't just for property buyers.
No, and that's a crucial point.
They are using it to import cultural and intellectual capital, too. They're granting this 10-year status to scientists, exceptional talents, outstanding students.
And that fascinating category, the humanitarian pioneers.
Right, which requires 5 years of service or recognized certificates of appreciation. It's kind of like the video game skill tree. You can buy your way up with 2 million dirhams, or you can earn your way up through exceptional talent.
Yeah, that's exactly what it is. The inclusion of humanitarian pioneers shows a really sophisticated approach to nation building.
So what does this all mean for their master plan?
Well, Dubai is essentially socially engineering its ideal population. They are systemizing the importation of human capital.
So lure in the young remote workers with the cheap 2-year visa, retain the liquid wealth with the 5-year retirement visa, and then permanently anchor the global elites with the 10-year golden visa.
Exactly. It's a diversified portfolio, but with their human population. And that 10-year tier comes with a massive mechanical advantage.
Oh, the travel rules.
Yes. Golden visa holders don't need a sponsor, and they can remain outside the UAE for more than 6 months without losing their residency status.
Wait, really? Because most visas force you to stay in the country for a certain amount of time?
Right. But the state recognizes that these highly valuable individuals bounce between multiple global hubs. So by removing that physical presence requirement, they ensure that even if you're operating out of London or Singapore, your primary residency and capital anchor is still Dubai.
That is brilliant. I mean, building this demographic utopia sounds amazing on paper.
It does.
But real estate doesn't exist in a vacuum. It exists in a highly volatile region. And if we bring in the data from the national, we see some real macroeconomic friction.
The numbers from Q1 are really telling here.
Yeah, because Q1 of 2026 was booming. They recorded 252 billion dirhams in transactions, which is a 31% year-on-year increase. And they had over 29,000 new property investors.
Huge volume.
But we have to impartially report what our sources are saying here. This boom is happening alongside intense geopolitical strain. The reporting specifically mentions the U.S.-Israeli war on Iran and the reality of drone and missile strikes impacting Gulf states.
Right, the regional context is incredibly tense.
And right in the middle of this tension, we have data from Velostrat showing a critical inflection point. In March 2026, Dubai experienced its first property price decline since the pandemic.
Yeah, villas dropped 5.8% and apartments fell 6.3%.
Which raises a huge question. We have booming transaction volume, but dropping property values in March, all surrounded by regional conflict. Is this visa rule change in April a sign of confidence? Or is it a defensive move to prop up a wobbling market?
Well, this raises an important question, right? Analysts are actively debating this. The juxtaposition of record transaction volume and a sudden contraction in property values shows how vulnerable a market can be when it relies too heavily on high-end speculation.
Especially during a regional conflict.
Exactly. But if you look at analysts like Farouk Syed, they point out that higher oil revenues from these geopolitical shifts will actually fund domestic infrastructure, which benefits real estate.
So the oil money acts as a buffer.
It does. But properties under 750,000 dirhams already made up 24% of ready home deals in early 2026.
Wow, a quarter of the market.
Right. So dropping that price floor for the visa isn't just about growth. It is a stabilizing anchor.
It's like adding ballast to the bottom of a ship.
That's a perfect analogy.
Because when your real estate market is mostly luxury penthouses and 10 million dirham villas, the whole economy's center of gravity is way too high.
Right, and when geopolitical storms hit, those luxury buyers freeze their capital.
Exactly, and the ship starts to sway. But by pulling tens of thousands of middle market buyers into the bottom of the property ladder, they lower that center of gravity.
Yeah. They traded a bit of exclusivity for a massive influx of resilient middle market end users.
Yeah.
These are people who buy for utility, not just speculation, so they'll keep buying even when the high end cools off.
That makes total sense.
Yep.
So to recap our journey for you today, Dubai scrapped its property price floor for the 2-year visa.
Yep.
Which creates these massive opportunities like those 9% yields, but also brings in incredibly complex tax realities for foreign buyers.
Right, especially with the currency risk.
Exactly. And all of this functions as part of a really sophisticated tiered residency strategy meant to bulletproof their market against regional geopolitical volatility.
It really is a masterclass in economic defense.
It is. And whether you're, analyzing global markets or considering overseas investments yourself, or just trying to understand how modern nations compete for human capital, this stuff is essential to know.
Absolutely. The rules are being rewritten in real time.
They really are. And it leaves me with one final thought to mull over. If a country can so seamlessly tie the right to live within its borders to the purchase of a 400,000 dirham studio apartment, what does the future hold for the traditional concept of citizenship?
That's the big question.
Right. When global mobility becomes just another tiered financial product you can add to your investment portfolio, does a passport become obsolete? Something to think about. Thanks for diving deep with us today.